All you need is a copy of your national ID.
Uganda Revenue Authority, developing Uganda together.
Good afternoon, Uganda. Welcome to today's episode of Tax Mchuzi. My name is Anan Priska. I'll be your host today. And in studio today, we are joined by a very seasoned tax collector and tax literacy expert, Patrick Baguma. Patrick, welcome to the show.
Thank you, Priska. Good afternoon to our viewers. Back online as usual, but this time I've come in a different form. I really come with this Bible here.
Prepared.
Today I will come prepared to answer your queries regarding the law.
Okay.
But this case specific to rental tax.
Okay, we're very happy to have you. And today is 1st June. So, June means the financial year is actually coming to an end. So I'm sure every taxpayer out there is wondering, as the year comes to an end, what are some of my tax obligations? Have I met them? Am I on the right side of the tax man? So, and I'm sure if you're a landlord out there, you own properties, you're earning your rental income, you're wondering, what are my obligations to URA? And that's why we're having this webinar. That's why Patrick is here to walk you through that process. So Patrick, I'm going to come to you. If a landlord is out there and they paid their property income and they're wondering, now what do I give URA? Do I have to give URA something? So who is eligible to pay this rental income tax?
Who is eligible? Apparently, first of all, we have to appreciate, as you said, this is the 1st June, and most of the people have paid.
Yeah.
Because this one is almost like the last month of effecting the payment.
Okay.
So basically, it's like we're reminding each other more special about today. Almost the people who like filing on time. There's a filing within time and on time. Yes, on time, this means the filing within the last month. So one, we expect in this category, one of first of all, most people whose accounting period is from 1st January to 31st December. This is the time we expect these people to give us their final rental income tax returns.
Okay.
And for individuals, of course, the same. The same. This is the last month of filing their return.
Okay. So what is rental income?
Rental income.
Yes.
Seems a simple question. And again, if you go to the technicalities, it changes.
Okay.
But to make it simple,
Like
to
simple
have viewers simple,
Yes, simple.
because you see most of us are like, I'm earning some money. How do you term it? So to make it simple, rental income is income that is received or earned by a person from the lease
From the lease.
of immovable property.
Immovable property, that is, for example, like can you give us examples of
Immovable. When you say one, maybe there are two things here. One, a person. Who is a person? A person here can be an individual or a non-individual. When I talk about an individual, these are corporate bodies, can be a school, can be an NGO, can be a company like Patrick Baguma Enterprises Limited.
Okay.
You get it? And we are saying from the lease of or letting out of immovable property. Immovable property can be land or buildings.
Okay.
And must be in Uganda. That immovable property must be in where?
In
Uganda.
All right.
For a given year of income.
Okay. So that is rental income.
That is the rental income.
Then there's also rental income tax. So
Rental
what's the
income
difference
tax.
between those two technical terms?
Now, you talk about rental income, and you say that is the rent received. Now, before we go to rental income tax, now rent is a payment And people never say, is it in cash or in kind? You see, sometimes people pay over and above what they're supposed to pay, like a premium. So that amount is part of the rent that you receive.
Okay.
That's if you go to the law, they say rent is any payment, including premium or like amount that a person receives from the use or right to use or occupy land or buildings. Now, if I go to your question, what is the difference between now, what about rental income tax? Now, rental income tax is the tax
Just
that
the tax that
the
you
tax
pay
is charged on
on
those
the rental
people.
income.
Exactly.
So let's try and create like a persona. So me, if I rent at a certain at a certain place, like I stay in a certain apartment, so I'm
Yes.
paying rent, right?
Perfect.
Okay. Then the landlord that's rental income to
Yes.
the landlord, right? Okay. Then what the landlord pays to URL, that's the rental income tax.
Perfect. But for you, who is you? You said you.
Like me, I'm the tenant.
Perfect. So now for you, for tax purposes, you are the tenant. And the other person receiving the money is the landlord or landlady. That's why also landladies in the equation.
Okay. So how much, okay, what is the current rental tax? What are the current rental tax rates and what's the threshold? Because I'm sure a landlord who owns apartments in Secure and someone who owns, let's say, Mizigo in a, not Kira, like the burger, they're paying completely different, they're earning differently, and that means they're going to remit differently. So, walk us through those dynamics.
Of course, you see, one of the canons of taxation is fairness. And
taxman is
talk
fair.
about fairness. Of course, you pay based on what you receive. As you say, gross rental tax is on rental income received. Okay. So what does it mean? Of course, the other money from that small unit, which are calling a muzigo, those small ones. The amount of gross rent he or she is going to receive from those muzigos or small units, the total gross amount may be less compared to the other man whose apartments are in Kororo or Kampala Road. Okay. So the formula remain the same, the rest remain the same, but the effect is now on the total gross amount. Okay. Where that is where the difference will come from. Yes.
But then what's the threshold? Imagine I own my small mezigos and yearly I get like maybe 3 months. Do I pay rent?
3 million.
Yes.
Wow. That is a real technical one. Now, as we go on, of course, at the end of the day, before we conclude, we will be able to guide our viewers. How do you compute the rental?
Get into the
now, to follow your question, for individuals, the formula somewhere favors them slightly based on the figure I've given. However, the figure I've given me, it means that the person qualifies. It's only for people whose total gross rent from all the rental premises is below 2,820,000. If it is below, if individuals, you don't expect. Okay. But if it is a company, you expect it to pay. Okay. As we shall show them as we move on. As we compute.
Okay. So just to get clarity, do non-individuals also have a threshold?
No.
They do not?
They do not.
Okay. So going back to the individual and how the threshold works. I'm imagining someone has rentals, but the 3 owners, let's say, like 1, 2, 3 people in these who own these.
You can say me, you, and another person.
You, me, and our producer Trevor are the owners. But when you calculate all the money we get in a year, it's above the threshold, right? But if you're to split that money, like for among all of us, that you get your share, each individually, we don't take that threshold. Yes. So how does URA handle something like that?
Now, if you go to from what you have explained, it goes to how was the company formed. Because you see,
No, yeah.
a group of one or two, more than two people, is a partnership. Yeah? I don't know whether that is why you are driving. Because either I said you're either an individual or an individual.
Okay, but then some people are not like formally. There could be like siblings, like we're just three sisters, and this is our shared property.
A shared property.
Yeah, but when when it comes to dividing, everyone gets their chunk.
And now you see now, if you go for law purposes, one either it is an estate of so and so.
Okay.
You get it?
Okay.
Now what does it mean? That is an individual, non-individual. If you go for tax paper, if you are to register, that is for non-individual. Or otherwise, these people are through an informal arrangement, which if they are advised to formalize, to form a partnership. You get it? Because already see, you know how much money, in what proportion you are supposed to share the income. So indirectly, this is a partnership, but you haven't formalized your what? Partnership what? Company.
Okay, so they have to formalize,
formalize.
go through the right process.
Perfect.
Okay, that's very well responded to. So now that we have an idea of how you'll be able to compute, or we have an idea of the threshold and what that means to different property owners. When is someone supposed to actually, file and pay this rental income tax? You hinted it from the start.
From the start.
But, just
Just a
reiterate,
blush.
create, more clarity.
Now, one, of course, you see, rental income, like any other income, they have due dates for filing and the payment.
Okay.
Now, to first make it clear here, the due date for payment of any tax aid is the due date for filing.
Okay.
That's key to note.
That's...
Now, if it is a company, we expect you to file a provisional return
Okay.
and a final return. But this applies both company and individuals. You get it? Now, when is it due? When are the two returns due? Provisional and final. Now, for provisional, I want to make it simple. You are supposed to file, if it is a company, you are supposed to file provisional return within 6 months from the start of the financial year.
Okay. So from July, the financial starts in July. So I count 6 months.
Within those 6 months, yes.
So that's up to December.
So now what does it mean? That for people whose year starts from 1st July and ends the 30th June, you are supposed to file a provisional return between 1st July to 31st December. And the law requires you to pay in 2 equal installments. Okay. So if you make a provisional pay maybe like 5 million, you expect you by 31st December to pay how much? 2.5.
Okay.
For individuals, we expect these people to file within the first 3 months from the beginning of the year.
Okay.
So they're supposed to pay in 4 equal installments. That is quarterly. Every 3 months, you put in.
Okay.
For final, we expect companies to file within 6 months from the end of the year.
Okay.
So what does it mean? That as the year is ending, you are starting another year. So what does it mean? That as you file provisional return, at the same time you are filing a final what?
Return.
Yes. He said provisional within 6 months from the start of the year. Final within 6 months from the end of the, as the year is ending, you start. So they're done at the same time.
Okay. Thank you for bringing clarity onto that. And speaking of payment, URA recently introduced a USSD code. How can taxpayers use that code to make these tax payments? Because many people, landlords, will be like, okay, the process is so hard, especially for individuals.
You have to go to the bank.
I have to go to
line
the bank
up,
and do this. What is a PRN? Like it becomes so cumbersome. So the tax man has really eased things. So just take us through a little bit about this USSD code and what it does for you.
Maybe before I go to the USSD code, USSD code,
Yes.
you can see. just to give you a chance how to pronounce it. Maybe what are the rates?
Okay.
You see, people maybe they say this is what talk about today. Payment. What are the rates?
Okay.
Maybe to bring people on board. Effective July 2014. Before July 2014, we used to aggregate rental income plus other business incomes. It could be aggregated and taxed accordingly. But effective July 1st, July 2014, rental income is supposed to be reported separately, and the expenses which are only attributed to that rental income, they are the ones which are only allowed for tax purposes against that rental.
Okay.
Now, but almost for the last 3 years, the rent has been going through amendments, changes.
Yeah.
But since we talked about currently, these people now for the current return, we talk only limit ourselves to the what? Current rates. Now, for currently, I know people either are filing now or going to file. If you're an individual, you get total gross rent from all the premises. You are getting rental income. And there is a fixed fee, I call it a fee or threshold of 2,820,000. The balance, what remains, is what we are calling chargeable rental income. And here we are going to subject it at a rate of 12%. That is for individuals. I don't talk about individuals, even in partnerships. The individual partners, that is the rate at which they will be charged. When you go to companies, it changes slightly. For them, we also want to get total gross rental from all the rental premises of those movable properties, either land or buildings. Then the own allowances are going to give you, what you call deductions, and loss will only be subject to 50% of the gross rent.
Okay.
So does it mean that if expenditure is over and above 50% of the gross rent that you received, you only limit it to 50%.
No more.
What remains will be chargeable rental income, and the tax rate will be 30%.
Okay. Okay.
But also there is also this category of people who are non-residents, but they have got premises in Uganda. The tax rate is 15%.
15%.
On the gross rent received.
So to 15% on the gross rent.
On the gross rent received.
Okay. There are
no deduction, nothing like deduction, nothing, just 15% of the gross rent.
Okay, that's very straightforward. Okay, that came out really clearly. So thank you, Patrick, again. What are some of the tax exempted properties according to your?
You saw, I said when I carried this book. For now, it may be a topic for another day, but if you go to section 21 under exempt income, maybe since already we are here and you're talking about it, and you know the law, it's not easy to interpret, but you know, it said a good lawyer knows what to find the law. That exemption is under section 21, and there's something strict about that rental income, which is only exempted. So if you go to section 21 of the Income Tax Act, that is exempt income. They're telling us that the following amounts are exempt from tax. That is section 21 1F. The income of an exempt organization.
Oh, okay.
You get it? And this income, other than the property income, except rent received by an exempt organization in respect of movable property. And the rent is used by the lessor. Now this is the people now receiving that organization. Exclusively for the activities of the organization as specified in paragraph BB, 2BB of the Income Tax Act. That 2B is about to these are exempt organizations. So in a brief, if an exempt organization and the rent you are receiving from those premises is strictly used for the activities from which you are formed to do, that will be exempted from what?
From tax.
From tax.
Okay.
But the debate will be big. How do I become now exempt? That will be a topic for another
For
day.
another
But
day.
for now, that's where you find it. That's the only income which is exempted under property.
Okay. That's. I guess we'll have to. If there's someone out there who has more questions, the law is there.
There.
You can always refer to.
True.
And remember, knowledge is power.
If you go to section 20, if you go to section 21, it will find out where the what? The 2BB.
2BB.
Those exempted companies, which are there, they talk about amateur sporting association, sporting club. But the question is now, how do you qualify when they apply for exemption? There's also another procedure, and it's a bit lengthy.
I think that needs a webinar of its own.
Since we are here to share, if there's someone who knows.
So yeah, that's definitely something for another day, and we'll definitely do a show on that. But going back to, I'm going to take you back to expenses. What expenses can be claimed, and what are those that cannot be claimed? Because if I'm a landlord and I'm there considering, doing my taxes and what, I'm wondering, okay, what are the expenses that are allowed and what are not? Yes.
So when you're reading the law, that those keywords, if I say that for the past 3 years, the Income Tax Act has been undergoing several amendments. And those amendments also affected the rental tax. Now, effective 1st July 2022, this area we are in.
Yes.
For individuals, as we said, we can equate expenses, but there is a fixed amount for individuals, which they put there as an allowable deduction. Nothing more, nothing less. So, in the layman's language, we can say the limit of expenses for individuals has been capped at 2,820,000, subject to future amendments. You get it?
Okay.
Then for companies, as I said, they're only limiting expenses to the tune of 50% of the total gross rental income received.
Okay.
So if they are over and above.
But what can I, like when I'm doing my taxes, what will I be like? This is an actual expense and what's not? What will the tax
now
accept and disapprove?
we're going now to the critical question. People say, but now, if you're talking about like if I'm a company, it is 50% of gross rental. If my rent is about maybe 100 million, but the total rent, actual rent, rental expense incurred in generating that rental income is maybe 2 million. I'm lucky I'm going to get 50%. No. The limit of expenditure is 50%. Now, if the expenditure incurred in generating that rental income is over and above, we limit it to 50. Otherwise, if it is below, we take the lesser because it is subject to verification. Now, it takes me to the key question. That these people who are letting out commercial properties, and at the end of the day, the total gross rent received from there is over and above 150 million. These people are supposed to register for VAT. So what does it mean? That those expenses, because also the law has changed, for us to allow those expenses, they must be IFRS, going through IFRS. If they are not, then they won't be allowed as.
They won't be allowed.
Because the law says, if a VAT registered taxpayer, for you to benefit from those expenses, ask for your e-receipt. I think even the campaign is going on.
Yes.
Mpa e-receipt yange.
It's happening. Okay. Thank you for responding to that. So we'll definitely, I think, want to get into the numbers. Like we've had all the talk and all the theory, but in the end, you can tell me all about it, but until I see it,
so how they compute it.
Yeah, I see how it's computed. It will not make as much sense. So let's get into that part. I think this is the point where the producers will share Patrick's screen. Then we get crunching some numbers.
Okay. Let me see whether my computer has not.
Begin with the individual.
Let's begin with the individual.
Yeah, because that one is a little bit fast. Yeah, we'll start with the individual and then get to the.
Now, for us, we are going to assume that We are earning a lot of money here. Using hypothetical figures.
Right.
So this is our Excel. Maybe for the purpose of this Excel sheet.
But while we get while we get to that, Patrick, I've been wondering. You talked about how you only charge tax on properties in Uganda, right? But what if I own properties abroad? Like me,
Abroad.
I'm here. I have a big building in Nairobi. Do you charge me an income
the Ugandan?
generated? Yeah, I'm a Ugandan and I have a building elsewhere.
If you're building outside, of course, you see when you go to the law, we expect you to declare income from worldwide sources. You get it? So we expect you in your return to show at me, I've got property in South Africa, in America, in the UK. At the end of the day, show it to us. However, because like any other country, there are tax policies that govern the income and within that place. One, income, we have seen it, not so?
Yeah.
But we could have paid tax on it. The law allows you to claim a credit as long as you can show proof that you paid the money aside.
Oh.
And that one, you have to go to our Bible again. I think it is under section 81 of the Income Tax Act. It allows you to do it. So to be brief, worldwide income, disclose it. If you pay tax on it, claim your credit using the law, section 81 of the Income Tax Act.
Thank you. Let's get to the numbers.
So here, will they see this side? Okay, let me try to put in the middle. So we're going to say gross rental income
Yeah.
from all sources. How to make it simple? Eh? I put how much? Give me a figure.
10 million?
10 million.
I feel like I'm even giving a modest about it.
And now I don't know, maybe a basic, maybe how much you're earning.
Rental.
So if I assume this is the gross rental income from all sources, right? So now you say maybe expenses, incurred in bring this money, in generating the above income. You say maybe I've got water, maybe like 500,000, maybe say power, maybe 200,000, say maintenance. Don't mind about the spellings, it may not come out right. Maybe say maybe 1.2 million. Maybe say maybe had the major repairs.
Yeah.
Sorry, major repairs. Maybe put the word major repairs.
Minor record.
Maybe you say put like maybe 4 million.
Yeah.
Maybe want to refurbish it. Innovating. So how much is it going to be? Maybe this rental income, we put it here 10 million. So how much is going to be here? That is 5.9, is it? So that is total expenditure. Total expenditure. And here we are saying it is specific to this income. That is how much? 5.9. Now, we begin with the individual. If this is an individual,
Yes.
what will be the rental tax?
That's 10 million. The 10 million minus 30.
We are saying that we said here now for individuals, you are going to get a gross rental from all sources, which we say now here it is 10 million. Maybe viewers may not be seeing. I need to make it bigger.
That's better.
This is the 10 million. Individual, we say there is a fixed fee of how much? 2,820,000. So we are going to get a gross rental, which is 10 million.
Yes.
And I said the only threshold they are giving you deduction is at a fixed amount. It is fixed. So less the threshold, say less, allowable threshold of of 2,820,000. So the balance is what you are going to call chargeable rental income. So you're going to get 10 million
Okay.
minus 2,820,000. You get the balance of 7,180,000. So I say now the rental tax, the rate of tax, rate of rental tax, you are saying it is 12%.
Yes.
So we're going to get our 12% equal 12%
Yes.
times 7,180,000. So our tax will be how much? 861,600. That is if you are an individual. Now, what happens if this money, as you said, was in a form of a partnership? The other category we talked about. Now, it will not change the formula will remain. What is going to be affected is now, how is this rental tax going to be paid now among the other category, the partners? So you're also going to come here and say, one, when you go to partnership, they have got an arrangement. The rates, maybe we can say, we call them the ratio.
Oh, okay. Yeah.
The ratio. If the partnership partners are good, maybe 2 to 1, maybe to 2.
Yes.
So what does it mean? If you go mathematically, if you get 2 plus 1 plus 2 equals what? 5. So we can say partner A is going to pay 2 over 5.
Okay.
You put a bracket, these things of of computer. 2 over 5 times 861 600. So the first pattern I pay this one, pattern B. You come here and pay, it's 1. Now 1 over sign. Open back to 1 divided by 5, close bracket, times 861 600. Then pattern C.
What partner?
Just go exactly. So it is simple. We even put 344 640. At the end of the day, the total is supposed to be this plus this plus this one here. 861 600. Now, the other category is about companies. If you go to company now, that's where you're going to see some thread change. We're saying here 1, if it is a company, what happens? Here, first of all, first bring the facts up. We say gross rental income. You said is how much? 10 million. We said total expenditure incurred was how much? It was 5.9. Using the these are hypothetical figures. 5.9. So what does it mean here? We are saying, what does the law say? The law is telling us 50% is capping expenses to the tune of 50% of gross rental income. So now we are saying the law telling us, cap it. People say, why are you getting the mandate? Cap it to 50% of gross rental income. So what does it mean? So allowable expenditure is going to be 50% equals sign 50% times 10 million. So we are going to limit this person expenditure to what? 5 million. You're going to say, what happened to my 900? when I finish, there's something I want to explain briefly.
Okay.
Now, what does it mean? To get our chargeable rental income, chargeable rental income for this company, we are going to go get the total gross rental received. Just put the real figures here. We're going to get 10 million
Yeah.
minus what the law is telling us, 5 million. Get the balance of 5 million. So now, the tax, rental tax to pay, if you come back to the other question, ask me rental tax, it will be 30%. Here it is at the rate of companies at the rate of 30% of that rental income. So we're going to get equal sign 30% times 5 million. The 5 million, this is the rechargeable rental income. So in a brief, this is how it is done. Now, where I wanted to go, you see, prior to 1st July 2022, you see, before like that previous year, financial 2021, 2022, there was a cap of 75% expense of gross rental, but also plus interest on a mortgage. You get it? So some companies have what they call assessed loss.
Okay.
So they're asking now, if I'm one of them and I've got assessed loss, what do I do? How do I do it? You say now the law, for those people may not know, if you have got assessed loss prior to 1st July 2022, they are saying it is okay. The law is going to allow you to bring it forward. You got it? You bring it forward. First of all, carry it forward. You get it? The subsequent year. But because of this amendment, we are going to cap it at 50%. Till when you are exhausted.
Okay. So you're doing it.
You may be having it over and above, so you have to keep 50% till when it is exhausted.
Okay.
That is on assessed loss brought forward prior to 1st July 2022. You have to take note of that.
Okay. Because there's actually a question in here about losses. So I feel like you've
So we
probably
preempted the
answered
person.
Yes, yes. Yeah. What if the company made a loss during this period? Will the company be able to claim deduction for the loss or expenses that led to the loss?
If the loss is
But if it's
made
this financial
within this financial year, unfortunately, no.
No?
We are capping at 50%. That's the law. No, that's why I said you have to show you are getting it the mandate. That's the law. However, for those people who had assessed loss prior to 1st July 2022, we are saying that the law is going to allow you to cap it to 50% till you're exhausted.
Okay. Okay. All right. So can we also have a computer? Wait, what happened to the 900,000?
The 900. No, that is I should use the other word people say pote. That's a harsh word. You know, they said the law is fair. It's the law. They are saying, well, we're going to allow you up to the tune of 50% of your gross rental.
Yes. Okay.
And I say it may be subject to future amendments. You never know.
Yeah.
The voice may come out to say maybe based on research findings, umuntu wa wansi maybe bamunyigiriza. Then they change. The laws are not there that they are rigid.
Yeah,
Whenever there is a need, they amend. But there must be facts. There must be reasons why.
Backed by actual reasons.
Exactly.
Okay. So are we going to do the one for the non-resident?
Non-resident. Very simple.
That's
Now,
just like you and your mom.
assuming this is a non-resident, maybe I'll explain after. Non-resident, we said it is 15% of the gross rent.
That's very true.
Get it? Of gross rental. Now, assuming the other 10 million,
Yes.
was gross rental, you're going to get rental tax is equal to 15% times the 10 million. 1.5. I'd assumed it was simple. Maybe, how is it done? You should talk about the non-resident. The person may not be here.
Yes.
Now, I'm going to go to those hard things in this book. What they call international payments. People source income from within Uganda. They forgot what they call source rules here now in this book. Now, you the tenant, when you are remitting this payment to this non-resident, You're supposed to withhold the 15%. Because you're going to ask me, I'm a non-resident. How do I do it? So you, the tenant who is paying, the law says
I withhold.
withhold the 15%.
So then
You pay less.
so I pay less by 15% and then
Yes.
I remit it to your.
You are perfect.
Wow, I'm a very good citizen. If I can
Eh,
do that.
you have to be. Well, no, you have to develop Uganda together. Otherwise, minus it, then you're nowhere. And that's why we are here.
So to all the tenants watching, and you know your landlord is abroad, please give us the 15%.
And remember, these are serious companies. There are very few people
Yes.
simply from these non-residents. Must be these must be most of them NGOs, big companies, and most of them even find that even in the the gazetted withholding tax list. Yeah.
There's a question coming in. This person is asking, kindly take us through a computation of one of the prior years with 50% capping for both individual and company, showing the treatment of IBD, and also comment about fully furnished apartments. Is that it? Yeah, I think they want to see a computation of that previous year.
There's a keyword the person has mentioned about service apartments.
Yeah.
The first question is, are they owned by an individual or by a company?
For both individual and company.
Because the formulas won't change.
Okay.
If there are service apartments, maybe people are going to bring now. You said talked about VAT somewhere.
Yes, it is.
So now it brings in the equation. You see, one, how to make it clear so people may, because this is a serious matter.
Okay.
If one, you are letting out commercial properties,
Okay.
and your turnover is over and above 150 million, the law requires you. Eh? It requires, it's a must. You get it?
Yeah, to register liability.
So this category also goes to the other group who have service apartments.
Okay, okay.
Still, the law requires you to register for what?
Yes.
Compared to the other group of people who are only anything to residential.
Okay.
You get it? That's enough to make it clear. Now, at the end of the day, computation won't change. You get it?
Okay.
If it is individual, the limit will be the same. 2.820. You get it?
Yes.
Now, for companies, the person said assessed loss. Now, I'm going to go back to computation. I just want to make it clear. If you saw you computed only for company and understood it, if you bring that assessed loss, that you brought forward the assessed loss, plus the current expenditure, everything must be within the limit of 50%.
Okay. Yes.
Now, maybe that's what I wanted to find out. He wants to find out, how do you do it? How do you compute?
Yes.
Because I felt like in this year, there was an excess of 900, then the other one. For this 900, forget, we said that one is a potato. So maybe to make it simple, maybe you can go here and where is it coming from. Assuming this company here, if I can try to, this one, I may not need it, 24. What happened this financial year? The losses which will be there,
You would carry them.
if they're less than 50%, part of the figures are going to borrow from here. At the end of the day, what you are saying that total expenditure within that particular financial, this one, going forward, everything must meet the threshold within the law of 50%. Till when it is exhausted, or till when they make changes in the law.
Okay. So I guess that's answered. And also just to let who's called Timothy, just to let him know is that we have these computations on our YouTube channel already. You can always go back and watch because of the time. We're a bit, we're in a time crunch, so we may not get into like the actual all the computations. But all this material is available, so you can always go on and watch it and get deeper insights.
Also, what the WhatsApp number, you tell them.
Oh yes.
Customer care line, that is open.
Yes.
They can reach us as well.
Yes. We have all those options. We have WhatsApp, and I think the WhatsApp keeps flashing on the screen. And we also have, you can DM us and all our socials. We are always ready to support.
And the touch point, is it
Yes,
working?
the touch point. The touch point is on. The touch point is a new CRM tool. It's very, it's open for business. Anytime, anywhere, you can access it, and we'll be happy to help. We are always here to help you. We have other questions coming in. There is anonymous attendee.
Anonymous.
Anonymous.
Tax will be anonymous.
Okay. So, oh no, this we responded to. How do you treat? Okay, in a scenario where your accounting date is 31st December, and the change in the law takes effect on 1st July 2022. What rates do you use given that half of your year was subject to the old provision? Does that make sense?
If the accounting date is 31st
That's
December,
December.
the person
And
said the change has happened in between.
Yes.
Now, if I talk about apportionment, but this is a serious audit. Now, in between, of course, you see, when they are changing the law, in between also the systems are designed to cater for that. So there will be an apportionment within the formula.
Okay. So the taxman took care of that.
It takes care of it.
There's no need to worry. Anonymous attendee. Then Opolot Moses, he's saying below the threshold, not subject to rental income. What happens if it's a joint venture of 2 people and each taking a dividend of 2.5 million? I think this is what you responded to originally. Originally, I think. Isn't it similar to what we discussed earlier? And then you shared the
But you see a dividend. You see, using the word, those words are key.
Yeah, he's taking,
What is a dividend per se? A dividend has a different meaning. How do somebody get a dividend? Can you get a dividend from rental income or from investing in shares? You get it?
Yes.
Because you are saying that rental income is from letting or leasing out immovable property, land or buildings. So expect income has come in. I remember what I know, a dividend comes maybe invested in shares somewhere. So if it comes as income, so the same rates apply.
Okay. Moses, I hope that is clear. Then Emily Gakiza, she's asking, the process of putting in the information in the spreadsheets is hard.
Wow, that is all, was it? Emily, maybe you still talking about system improvements. That feedback is good. We welcome it. It's very good feedback. Most people say that maybe Emily must be having a company. You see, when you have a company, you put very many things work in progress. That form caters for everyone. But if you're an individual, there's that simple form. Employment with rental or business with rental. But you can say that one, we appreciate the feedback. It is good for us. We are going to take it back to our process guys, IT people, and so can make it simple because I say tax is supposed to be simple. And it takes me to the other code you asked me now.
Yes.
USSD.
Yes.
Now. To make it easier for you payments, people talk about lines. Today it was raining in town. I reached where I am. There was no rain. People are like, now, if I was waiting, like, what has happened? You have made it simple for you. You can make a payment, the touch of your buttons of the phone. Whether you have a smartphone or not, capability. Or this big phone called the block phones. You can effect a payment by just dialing *285 hash, then for the prompts. They normally roll the airtime, but that pay or meme bills or water bills, it's the same. You'll be able to effect the payment. You made it fast, easy, and I think at less cost.
That's true.
At less
so
cost.
yeah, that's Emily, you could explore the USSD code, but also you can explore, and I think Patrick, you'll come in, getting a good accountant, maybe to support, especially for companies, because it can be a bit tasking. But if you have someone who is, a professional, they will support you, and it will be really easy. I think
maybe there's a keyword I know whenever I'm here. Make it simple. If you have got your records right, it doesn't take much. If the documents are there, you're speaking from one entry to another. And for those people using accounting packages, you just run the report put the system, and that's it.
That's it.
So maybe Emily, as you have said, guided Priska, we have got those challenges. You can get service of an accountant, though at a cost.
Yes.
Yeah, at a cost. Or otherwise,
But
if it is a technical matter, our offices are there. You can ask for guidance. They'll be able to help you. Because some of the schedules don't apply. So the question is to know what you want and where to put it. Because not all those schedules relate to you. Some are for manufacturing companies, others for big companies. For the look, if it is on a rental income expenses, validate. Put your tin and the period. Is it it? And maybe money paid at the end of the day.
okay. I'm sure Emily has got an assortment of options. She can, to ease the process for her. Okay, then Philomena Atima from LinkedIn. She's asking, is withholding charged on monthly rent or for every payment made?
Is withholding
Charged on monthly rent or for every payment made?
Now, apparently, that's like you're taking us to the topic of withholding tax. It's also a topic on its own. One, that these categories of people, persons, who have been designated by law to withhold the tax. Get it? Now, people normally target the other thing that if surprise is over and above 1 million, withhold. Get it?
Yes.
But now you see, if this person is a withholding agent, if you pay monthly, and I'm assuming this person it is Emily pay. Is it Emily? Fiona is paying. Now, if you're one of those categories, and when you make the payment, you are supposed to withhold.
Okay. There you go, Atima. There's your answer. Okay, so Moses is following. So I think he's just following up from his question. So can my provisional returns be the actual of the previous financial year? This is the person who
the other one who talked about we normally call it transitional in between. You see now a provisional return, one, the government makes a budget, is an estimate for how much money you're likely to make. First of all, this is a provisional return is based on the income you expect to receive. So now, if it is based on what you're likely to, if the same tenants, the rates have not changed, that is the rental rate per month you're charging from the tenants, then the same provisional what? You put the same provisional figure.
Okay. Okay. Moses, there you go. Then Chris, I can't pronounce the other name. It's from LinkedIn also. So LinkedIn, he's asking, why does URA go to assess rental owners in absentia without establishing how much a 4-door single rental, without establishing how much a 4-door single rental room earns on a monthly basis?
That is who?
Chris,
maybe what you need to maybe tell you that URA is running a self-assessment regime. And it has not changed for now. Where a tax officer or an officer of URA comes to put amounts on you, there's a possibility that you didn't exercise your mandate of filing a return. So he or she is coming in to bridge the gap. And that's when normally say to you, you know your business better than us. You are the one who knows that this room was occupied or not. You know how much money that you are getting from these tenants. So we give you that chance to file that return within the given time. Now, if in that category where they have assessed to you and you don't agree with the assessments, I said the tax about fairness.
Yes.
There is a window for appeal.
Your voice.
So please exercise your right and pay the right and the correct tax.
Okay.
Lodge an appeal mechanism, they will be able to hear you. So long as you have got evidence, and this evidence, some of them have got what they call rental agreements, and the proof of receipts that you normally give to your tenants.
Attachment is very fair and always willing to listen. So we're going to get into our last question from Clinton. Clinton is asking, how do you treat condominium apartments in rental tax?
Condominium.
Yes.
The first question is you see for the condominiums, there's what they call intent. You, the owner of the condominiums, what is your intent? Is it constructing and selling condominiums? You get it? If yes, that is business income. You get it? Because that is now stock. Your stock will be selling. Construct, sell. Construct, sell. So that is stock, so different from this category we're talking about. That is business income.
All right. So, okay, Clinton, there you go. To all our taxpayers, thank you so much for sending in those questions. It has been a very engaging, it's been very engaging. Thank you, Patrick, for coming on. It's always a pleasure having you here. And as we wind up, just request that you share your parting shots, then we can wrap up.
Oh, wow. May I know I go to the other key areas of compliance? We talked about areas about, the key areas I want to talk about registration. We know there are people out there earning income over and above from commercial properties above 150. Please register voluntarily. Don't wait for that officer to come and assess you. It is always a cost. That cost over and above what you have budgeted it's on your future profits of your budget. 2, once you register properly, pay the right and the correct amount of tax. When you do it, you avoid those penalties.
Yes.
Once you do it, file on time. Once you file on time, also when you declare, last one, declare correct information, because now we are in a .com era. Today you are going to hide, but tomorrow they are going to get you. So when they get you, the cost of non-compliance are always high. Comply to avoid all those unnecessary inconveniences. Otherwise, thank you for paying your taxes. I keep telling people that the good things you see in the country is because of those people who are complying.
Yes.
Those few areas, we believe if everyone does his or her part, we're going to be a better country. And this thing of donor dependence, will be a thing of the past. Shall be able to cater for our services. Everyone will be smiling. Yes, you wonder now that how the Bazungus do it, the whites. Because they comply. They'll comply, pay their taxes, the money for services after. When you do it, you're going to be a happy person.
Thank you so much, Patrick. Thank you so much. It was great having you on, and I'm sure our taxpayers have learned so much. It was a really good discussion. Please come back again. And as you always do. To our taxpayers, thank you for tuning in. Thank you for sending in those questions. Thank you for being, and thank you for working with URA. Thank you for paying your taxes. You are the reason, like Patrick said, these social services are being extended to all over the country, that mothers have access to medical care, that, your grandparents can get medicine in hospitals. So pay your taxes and watch the country change. And also, I would like to rally everyone to ask for your receipt. Don't forget to ask for your receipt every time you make any purchase. Please just say buy your receipt here. Just 3 things, 3 words. And also dial *285# and to make your tax payments like rental tax, border, advanced income tax. Yeah, we want to make things easy for you. And thank you once again for paying your taxes. See you again next Thursday for another episode of Tax Mchuzi.